Good morning. Yeah! Turn me up!
ECB to hike interest rates in June. Reuters poll. LNG. Oil shock boosts fuel switch economics. ING. India. Men, 3-money supply increased to 12% in April 27 from previous 11.9%.
We'll start soon. How much time we got? 3 minutes. Good. All right, almost there. All right, now are you ready to go? Jiminy Cricket, what are you doing? All right, let's go! Hey, hey, hey. Hey da boo boo. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, 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 my name is Wayne. Good to see you. Welcome to my home office. May the caffeine be with you. Ooh, too hot, too hot. So, hey, what do you want to do? Technical analysis, fundamental analysis? Do you want to look at the entire market? Hey, do you want some inside information? Ethical inside information? See, we have the analytics to be able to read and see what institutional investors are doing. And the goal here is not to make random trades or bets or guesses, but instead align our trading strategies now in the medium term and the long term in the direction of global capital flows. The assumption here is institutional investors, well, they have teams and resources that are massive, millions and billions of dollars go into their trading decisions. And, well, if you know what they decided to do, because you can read the market properly, you just piggyback along. It's better than swimming upstream against the current, don't you stink? So that's what we do. And Forex.Today is a collaboration between Traders Way for execution. They're our prime execution partner. They're our prime broker. And Tradars is the analytics platform so that you can make logical, intelligent, repeatable, conservative trades based on logic. Hey, dude, that's a pretty powerful combo, don't you stink? Like, Wayne, I got stop saying, do you stink? All right, calm down. Dude, I really want to sip on that coffee, but it's so hot. We got PPI today. 50 minutes. Do you guys want to cover that? Yeah, I imagine so, huh? Let's get an update on the headline news that have come out recently.
LNG. Oil shock boosts fuel switch economics. ING. India. Men 3-money supply increased to 12% in April 27 from previous 11.9%.
Canadian dollar. Bank of Canada. Minutes watched for policy clues. TD Securities.
Eurozone industrial output logs steady growth.
Oil little changed as Trump heads to China.
ECB's REN monetary policy should not be based on oil prices alone. United States MBA mortgage applications up to 1.7% in May 8 from previous 4.4%. Factbox King's speech, a guide to Starmer government's new proposed laws.
So there's a cool story here with
Gold price forecast. Gold US dollar holds near $4,700 despite high US yields.
I'm going to turn them on. All right. There's a cool story about Trump going to China to meet with Xi Jinping. And he's taking huge U.S. CEOs, not ones that are overweight, the CEOs of huge American companies, to do business deals with Chinese companies, right? Like Elon Musk is an example. They're all going. And I'm sure they had to pay their dues to get on that plane. And it's interesting because Trump and Jensen Huang probably had a discussion like, let's make a deal. What are you willing to give me, President of the United States, to get on the Air Force One and go to this meeting? And Jensen Huang probably said, well, I'm not going to give you anything. Or something else has occurred where he's like, well, I want to go, but you have to let me sell my certain chips, right? The chips that, or you got to remove the ban, or you got to whatever. But they had a negotiation. So Trump did the right thing in game theory, and he's like, okay, great. You're just not going to come with us. So the media has probably told you that Jensen Huang actually did get on the plane, and he is going to China. He will meet and do deals with China. But did you know Air Force One was already in the air on the way to China? And it landed in Alaska, where Jensen Huang's private jet landed, and Huang got on the plane. Like, I think what happened was Trump's like, all right, screw you. We're going to leave you here. Boom! And off they go. And there must have been phone calls. And they're negotiating the deal. Trump's already in the air. Like, dude, you just lost $8 billion in deals or something, right? Or maybe it should be $800 billion. I don't know, whatever. And so he called Jensen Huang's bluff. And all of a sudden, Huang must have capitulated, and he's like, well, catch up. We'll be catch up. We're already gone. So that must have been cool. Like, something cool happened, I think. Maybe it's all in my mind. But I do think that's pretty funny. Whatever, but I think something went down. And I think Trump won that negotiation. Just left. All right, screw you. So, anyway, it's pretty funny. Welcome to the world. Yeah. So what is going on in the world, huh? My coffee looks so good. Good morning, I'm Aiden, and let us get you up to speed on the shifting market dynamics. While the longer-term monthly trend remains decisively risk-on, today's session is showing flat and neutral sentiment as the market enters a period of indecision. This consolidation is characterized by a rise in the U.S. 10-year yield to 4.463%, which is providing support to the U.S. dollar index while keeping risk-sensitive assets like the NASDAQ 100 under pressure. 1. U.S. mortgage applications bounced back to 1.7% in May, recovering from a previous sharp decline. Eurozone industrial output is showing steady growth, even as ECB officials warn that monetary policy shouldn't be dictated by oil prices alone. Meanwhile, a Reuters poll confirms expectations for an ECB rate hike in June, and oil markets remain steady as political headlines from the U.S. and China take center stage. Biggest movers right now, high-yield bonds is down. Silver, copper, platinum, and U.S. 5-year yield are up. High-yield bonds is down. That's got to be a t-shirt. High yield bonds is down. What should we be trading? Aussie Kiwi, really? Really? Is that right? Huh. All right, so how do we interpret this? Well, if this is correct, the market is neutral right now, right this second. Cool. So whatever you want to do, probably don't do it quite yet. You're either way too early or way too late. But that's why we meet this time of day, yo. So what, I wish I knew what that sound is. Now I'm thinking it's the streaming software. Maybe somebody just subscribed. No, I don't think that's what that sound is. Anyways, we'll figure it out someday. Yeah, what are we trading? Sarcasm. All right, but what do we know? 74 on S&P, fine. VIX below 18, not by much, but it's a welcome sight. Bitcoin all over the place. It's 80, it's 81. It's 80, it's 81. It's 80, it's 81. Yeah, yeah, yeah. In fact, 24 hours ago, I received a payment in Bitcoin, and I received it at $80,680. I'm quite certain like that's exactly the same price, but I know it went down and it went up and it went down, but anyways, at least it's above 80. That's a decent thing. Gold is up a little bit, but we should be well above 4,800. So above 4,700 is welcome, but I'm not getting all giddy. Huh? I'm not getting giddy over that. Not giddy up, anyways. Oil, just 102. Yeah, but I want to see 92. So not much going on there. 98.5 on dollar. That's also quite benign. 4.46. I don't like that at all. Wah, wah, wah. So that's a bad sign. We're almost to 6 on the risk. I think 2 days ago we were just under 5, and now we're almost to 6. So there is, well, I guess we can see here, right? We are creeping up. Okay, we are creeping up. Slowly but surely. We're not falling off a cliff. We're rolling down a cliff. Yeah. Oh, David Pegler's up in an hour and 41 minutes. Dude, cool. Yeah. I have a market debriefing in 8 hours. Hey, I just got invited to a Georgia Tech memorial for a professor and dean of cyber, sort of the international business school at Georgia Tech. He also ran this professor ran the executive MBA program, amongst other things there. And he was the one that invited me to lecture at the Georgia Tech executive MBA program many years ago. And he was on the board of directors for the Georgia Tech board that I sat on for several years. In fact, he was the founder of that board, so he had been with Georgia Tech, I think, 30 years. He was also a big shot at the World Trade Center in Atlanta. He was a big shot in a lot of different places. He was the kind of guy that, when diplomats visited Atlanta, they would surely meet with him. So anywho, he passed away, I don't know, a month ago. And so this is the university's formal memorial. And I just got the invitation this morning because I'm not really officially part of Georgia Tech. And so they're like, oh, wait, so I got invited at the last second. So I need to get up there today. The thing is, I got to be there at 4. It starts at 5, so I got to get there 4 and then park and then get to the facility. That takes half hour, and then you don't want to show up late. So anyways, so you plan to be early or you plan to be late. I prefer to plan to be early. So long story short, I don't know if I can do the 4 o'clock today, but I'm going to try. I got kind of screwed over by Georgia State University last week. I went there to their executive MBA program. They had a competition for university-led hedge funds from around the world, and I was invited to attend that. And I get to this executive center for Georgia State, and can you believe it? They didn't have reliable Wi-Fi. Their internet was down. I couldn't even buy a Rockstar from the Coke machine because the credit card part of it didn't have Wi-Fi. I'm like, what? I'm pretty sure Georgia Tech will do it. So anyways, I got to figure that out. But I did confirm that I will be there and pay respects to Dr. McIntyre. Super nice guy. So I'm going to try to figure out. I'm going to try to do it. I'm going to bring my laptop. I'll try to get it done. But if I don't show up for the 4 o'clock, that's what happened, huh? Yeah. Or maybe it's just easier to cancel it, huh? Maybe I'll just cancel it. Because then I have a backpack and a laptop, and I walk into a funeral. And I'm like, what's up, fellas? You know, with my laptop and my backpack. I'm like, yeah, I might go for a hike later. So I don't know. We'll figure it out, huh? Or maybe try for a 3. Yeah. That's a big fat giant maybe. Yeah, maybe. We'll see. We'll see what we'll see. All right. So look, clear as mud right now. Let's zoom in and get a better look, and we are still flat. So, look, we have completely, okay? We have 2 completely different measures of what the heck's going on in the world. One of them is just analyzing every G8 currency relative to every other G8 currency. Okay, that's a lot. Okay, let's say that's 68 real-time calculations, and that tells us there's one currency pair and everything else is an ignore scenario. So that measure says there's no real trade right now. So whatever you do, you probably want to delay and defer until institutional investors make their move, and then you can hop on board. You don't want to be in before the institutional investor, because then you're guessing and betting, and you're like, I bet you they're going to go along today. Well, whoa. What I'm trying to do is use our data to say if or when institutional investors make their move, we will be able to see it. That's what I mean by inside information. We won't see it directly because you can't see their individual trades. But what I can do is I can look at assets moving one way or another, and I can correlate them to this, that, and the other thing. I can read yield curves. I can read a bunch of things, right? To tell you this is what has been decided. And then we act. We hop on board. We can do this quite quickly. We can do it, in fact, in real time, so that you're not entering trades 3 hours after the fact it's happened, because that probably doesn't do you much good. So we are bullish. Done. We're not trading now. Done. And this is completely different math, this daily risk assessment. Negative 0.17. Dude, this could be 13. Okay? This is a very accurate number. It's very accurately nothing is happening. So you don't trade. The other statistic is looking at price action only. 64 calculations of price action tell you, nah, nothing's happening right now. Don't make a trade. Now, that's like walking up a dormant volcano. Okay, it's safe, but wouldn't you like to know exactly when it's no longer dormant? Time to go home? Time to call the rescue helicopter? Wouldn't you like that? That's what we want to know, right? What's the important information? Well, there's two. This thing hasn't exploded in 2,000 years. Okay, I'm going to go for a hike. The next important thing is it's going to explode. It's starting to rumble. We can feel or measure, maybe you can't even feel it, but our instruments are measuring a dramatic increase in minor earthquakes that you can't even feel because they're 27 miles below your feet. You can't feel them, but we can measure them. Okay, our sleepy giant might be waking up. And that's what we want. We want those types of tools and instruments and measurements. Because if the sucker's going to explode or is in the process of exploding, wouldn't you like to know? Yeah, that's good information. And from that, you can make a decision. Oh, really? There's a high probability that the volcano is about to explode? Nah, whatever. I'll keep hiking. Well, that's your decision, bro. Lots of people have said, hey, that volcano hasn't exploded in 2,000 years. I have nothing to worry about. And found out that maybe it wasn't the right decision. Huh? I don't know. So tell me, what's going on in the world? Dollar was ripper strong. Then it was strong, but not that strong. Now it's strong relative to everything else, but relative to everything else isn't strong or weak. So, yes, Aussie Kiwi is the one that we have highlighted on the other page. So you knew in less than 5 seconds, Aussie Kiwi long was the only trade that exists. But I can also tell you it's not that great of a trade. Okay, Aussie is strong relative to everything else, but it's really not that strong. Kiwi is weak relative to everything else right now, but it's really not that weak. 0.3. So the differential gives you this 0.3 with that 0.3 is a total differential of 6, and that makes it the best opportunity. But at the end of the day, that's barely an opportunity. And I believe on this day trade, if it's above 3.3, I think it gets to be slight. And I think if it's above 0.5, it's an opportunity. So we're at 0.6. It's barely an opportunity. But the way I also read the market is if I look at all of this stuff and I only see one maybe, to me, that's a forget about it. Not now is the answer. Like one thing maybe, and trading Aussie against Kiwi? No. So, dude, this is now, right? So this is the visual representation of what we saw in the first 5 seconds. Aussie Kiwi maybe, there is nothing else to even consider. So hold your horses. You are bullish. Let's say I am bullish long term. Why? We measured it all in the risk radar. Long term, we are bullish. Medium term, we're kind of bullish. Okay, great. The markets are not moving now, bullish or bearishly, so I should not be entering the trades. I need to be able to measure things. And when it becomes bullish, then I could, tiptoe. So, is it bullish right now? No. Look, negative 0.45. This tells me quantitatively, I know I'm probably right for being risk on, but it's a bad time right this second to enter the market. None of the other assets that are risk on assets are risk on right this second. So I might be right in an hour. I might be right in 4 hours. I might be right tomorrow. Maybe I'll be right next week, but I am not right now. Look at me not losing money. You see the frickin' smile on my face? Dude, you know how important that is? To not start the day with a bad trade? How does that impact your confidence? Forget about your profitability, but just think of your confidence. Like, whoa, Mr. Dodge that bullet. But also, I wrote a magazine article, I don't know, 15 years ago about, the importance of one less losing trade. So if you made 5 trades a day and 4 of them were winners, what impact does one less loser have? Okay. I don't know if it was 5 a day that I did. Maybe I did in 30. I probably did more than 5. If you're doing 10 a day and you cut out one of the losses, I forget what it was. But the point was, assuming you're an active trader, and I definitely was an active trader back then. I'd do dozens of trades per day, right? And so the article is the mathematical importance of being correct, let's say 5 times in a row, but not out of instinct, but out of being able to read the market properly. Even though you got 5 in a row correct, what's the value of knowing one more is too many? It's a bridge too far. And don't say 20%, because that's not true. Don't say 18%. Don't say 14%. What happens is your confidence goes up, which you can't measure, but that is important. But statistically, the difference is massive in profit, especially over a month, over a quarter, over a year. I put all of that, and it's like you make 40% more money or something. Like, it was really massive. But the other thing that is hard to measure, okay, so I put confidence there, like you can measure how much more profitable you're likely to be, and it was immense. But then I said, think of your confidence level to dodge these bullets instead of taking the hit. Because remember, the one loss also removes the one winner. They offset each other. So the last trade you didn't make, in a way, is a winner. A 0 is way more profitable than a negative 40. But then the last thing that's not easily measured is you probably spend 1 hour a day less trading. 1 hour a day. Because you're like, well, I got 5 in a row. It's not that I'm not confident in the next setup. It's more like I can see the next setup is one bridge too far. We've hit weekly pivot points. We're through the average daily or average true range. Like, dude, this thing is overbought. I've rode this donkey as far as this donkey can go. Like, it's exhausting. And if it keeps going up, look, I got 90 to 100% of the logical, trade here. Like, there's no shame in taking profit if you've rode it all the way. I just don't expect more for today. I just don't expect more for this week. I just do not expect. We're at the monthly R3. I'm done. And having the confidence to actually get out of a winner is way more important. Oh my God. acquiring that level of confidence to get out of a winner is also massively important. So anyway, so you add this up where that's 20 hours a month of less trading, where you can do your research, you can do your fundamentals, you can review your trades, you can spend time with your spouse and your children, you can volunteer to be a docent at a museum. 20 hours a month is a lot. So I try to help my community 10 to 20 hours a month. My local community, right? And I throw like the charitable boards I manage and all that kind of stuff into that equation. That's a lot of time. You could be a docent at a museum teaching children about art and history. You can those 20 hours a month, 240 hours a year. What's the value of that? Do you make $100 an hour? Right? Like all of a sudden, what is that worth to you? 2,500, 25,000, $250,000 a year of your time given back to you. Plus, you make 40% more. You see, like it's so massive. So when I log in and I go to the sit rep report and it says there's only one mediocre trade in the whole thing. So take a knee. That's what we say in American football and the Canadian Football League, right? Your coach says, or the captain or the quarterback, take a knee, and right, everyone gathers around. So right now, stand down. How about that? Stand down. You might be red hot, risk on. Stand down, soldier. Take a knee, son. What do they say in girls' volleyball teams? I don't know. Okay. Cool. Can I get off the speech now? Is that enough? Are we done? Yeah. Golly, Wayne, just tell me what to do. I just did. Check this out. Wayne, just tell me what to do. Put me in a trade. There's one. Done. There it is. So look, if you need signals, and we know lots of people do log in, and they're like, just tell me what to do, whatever, just give me a signal. And I always poo-poo on them, right? I think I'm a changed man. I've had a revelation. I love TradeR so much. It's so unbelievably good. And I think this hit me last night, in fact, at our 4 o'clock meeting inside of TradeR's. We were looking at a couple of trades from now to the end of the year. Right? Like a new trader can't get through the day. We were planning the rest of the year. And I was looking at what Aiden was producing. And remember, I taught him, and I spent 2 years teaching him a large language model. Technical analysis, fundamental analysis, seasonal analysis. So I'm measuring business cycles and all these things, right? Okay. And I look at it, and I was explaining to everybody my emotional response to it, because I know how complex the math is, but it's weird because that is exactly what I think. But I didn't teach him to draw the chart. I taught him how I would do the analysis if I was me. All these, remember, there's multiple things to look at. That's where it gets complicated, where like TradeR's is becoming a neural network where it's not just the math, and that's just algorithms. but the relationships between everything. And there's lots of relationships that overlap relationships that overlap relationships. Like, it's quite complex. But a human can do it, but we do it with rules of thumb and sort of vague patterns. Like, we're good. We're really good. But I couldn't tell you if it was 2.8 or 5.2 or 7.9. I would just say, like, yeah, this usually happens kind of around now. Okay. And therefore, I can think of a pattern. Humans are really good at sort of vague patterns. So I teach Aiden to do the heavy math that really I need artificial intelligence to do. And guess what happened? It produced precisely what I think. And that just crazy improves my confidence level. Because I know that's what I think or believe. Maybe that's even better than think. I know that pattern is what I believe. Aiden doesn't have beliefs. He only has mathematics. And apparently my beliefs and his math produce the same outcome, which means I'm confident. So look, I guess there's two ways of doing this for those that need someone else to make decisions for them. You can go to some idiot scammer that has a little EA that just sends you signals, and they promise you for $50 they'll make you rich quick. Whatever. That sounds so stupid to me, but this is what people do. Now you can log in to essentially our neural network, and it makes sense based on fundamental analysis, technical analysis, monetary policy, market sentiment, and 20 years of analysis. And we can break it down to what is happening right this second and the relationship between all the assets right this second. Put it all together. Dude, like, this is crazy complicated. But I trust it. And if you want to log in and go, oh, well, maybe I should look at Aussie Kiwi because it's kind of bullish. Look at our confidence level. 3. Yeah, it's bullish. What about all the other trades? There are none. Now, a broker might give you raw reasons to trade like a maniac. Why? Because every time you pull the trigger, you get paid. Or they get paid. And maybe a signal service has an introducing broker relationship where they get paid every time you trade, they get paid. So now they pump you up. Oh my God, you should go long Euro Kiwi. No, you should not. Not now. So if I can at least get you, if you're one of those people that you're like, Wayne, I don't know, I don't even care, just tell me what to do. I'm that freaking lazy. Well, 2 things. I'm not going to make you rich because you don't have what it takes. And the second thing is, if you just want to kind of learn how to trade through getting yourself into half-decent trades more often than a bunch of stupid trades, and you learn from doing, maybe it's just your modality. Dude, you can go ahead. This is it. This is not going to make you rich. You might be able to use it to learn, and it's unbelievably awesome. I promise you that. It's too complicated to even kind of explain what's going on here, but we've considered hundreds of things. Long-term, short-term, medium-term, but also real-time. And not just in of itself, but in relation to everything else. This is not a bad trade. Now, I look at it, I'm like, confidence level of 3. I look at it 0.5%, and then nothing else is moving. So I pass. But see, now I have experience, and I'd say, well, I see a signal, but I wouldn't take it if I were me. But if you took it, it wouldn't be wrong. But I'm looking past that and go, well, there's only one thing. I'll wait. You see? I can just sit here and wait. Is the news going to be a catalyst? I don't know. What if you know nothing about fundamentals? What if you know nothing about news? I mean, I swear to you, I remember the first time I saw non-farm payrolls. I had no idea news impacted financial markets. That's how naive I was when I first start trading Forex. All I knew is it was $2 trillion a day. I can probably make some money. So I'm like, how hard can it be, right? So I had no idea what a moving average was. I was years away from pivot points, that kind of stuff, right? I had no idea what MACD was. I had no idea what stochastic was. I just bought and sold. And I didn't even know news was a thing. So one day I was watching my charts and euro dollar jumped 300 pips in 1 second. That was my introduction to non-farm payrolls. So let's say, let's say you're in that same, now I doubt you're that naive, but it was a different world. Huh? I walked to school in bare feet in the winter, chewing on caribou meat. Well, none of that's true, but life was quite different as a Forex trader back then. Right now, let's say you know very little. This will at least put you in logical trades that are not stupid. And it tells you the confidence level. So you're like, mediocrity. So you might create a rule here. You need a 4 on the conviction before you take it. Before you even consider taking it. And then you can go to your charts. Well, so look, I guess what I'm saying is if you want to use it as a signal service, I can't imagine anything's better. Hmm? Yeah, HDO producer. What a man! Yeah, he's like uploading yourself to the internet. It is strange. I can tell you it's not me though. And the interesting thing about this type of AI, which means I think it's already becoming obsolete. Not tradars but our version of AI, like I don't care if you use Perplexity or Grok or Gemini or ChatGPT or Claude, I think that's already become obsolete because what you're doing is you're sharing AI with everybody else. So imagine there's one Claude, and every second of every day, 1 million people are sharing Claude with you. The way AI handles it is it doesn't differentiate you from anybody else. So you ask it something, it gives you an answer, and then you have this little conversation, and then it won't remember you the next time you go, or even in the middle of a conversation. So if you're sitting there asking 100 questions, by the time you got to the 100th question, it's forgotten the one question because it's also talking to a million other people, you see? And there's a limitation to that. The next step is your own personal large language model that never forgets any conversation it ever had with you. And it learns you more and more and more. And then based on what you ask it to do and the tasks it does on your behalf, the more it learns of itself. But its whole entire world wraps around you because it never, ever, 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 ever forgets. Oui. Yeah. So that next thing is, oh my goodness, what if I do build the world's greatest trading neural network that just 24 hours a day gets better and better and better? And I'll sell you the API. You're like, you don't even need to tell me anymore, Wayne. It's just a huge neural network. I don't care, Wayne. Tell me what to do. Aussie Kiwi long, it's mediocre. Done. So you're like, Wayne, let's skip that. Just place the trade. Okay. Wouldn't that be something, huh? Just, yeah. Off we go, HOTTOGO. But it's, I'm getting to that level where, dude. Okay. Dude, this is really amazing stuff. So you have to be on the forefront. And I try to stay. I was upset. I was talking to somebody. Actually, I'm mentoring startups now for a local incubator, and one of them's an AI guy. And he's been working with AI for 5 or 6 years, and that's what his company does. So I'm mentoring two companies like this. And it's interesting talking to other AI people, and I'm like, I said I was talking about this technology where you have your own AI instead of sharing someone else's AI, and I'm like, oh my god, I feel late, and he's like, dude, it's 3 weeks old. The technology has been around 3 weeks. Yeah, but I feel late. Yeah, and then of course some people are just still doing Google searches on ChatGPT, right? And then you're like, okay, I'm not too late. But oh my god, really, really, really fun stuff. In addition to this page, okay, recently we had European industrial production. It came out 0.2 as expected. See, it met. That's kind of neat, right? 5 minutes. We have 28 releases. Unfortunately, he's grabbed the wrong PPI from the Federal Reserve Economic Database. And I told you this is a problem. If you go to the Fed, and I do this all the time, so you can actually go to the Fed, the Federal Reserve Economic Database at the St. Louis Fed. I've met the Fed people. All right. And you're like, tell me about PPI in the United States. And they will give you 1,000 choices. You're like, 1,000? And you will struggle to find PPI year over year percentage change. And you're like, but it's the only stat that people care about. Yeah, well, good luck. You're going to spend a day looking for it. And so this takes time. So we were messing around with CPI yesterday, Aiden and I, at night, by the way, in the dark. And I'm like, dude, this history doesn't make any sense. And so we looked through it, and it was different types of CPI mixed together, and it's what is at the Fed. And so I'm going through all the data sets with Aiden, saying, This is right. This is not right. So I look at this and I know what he's doing. This is the value of the basket, but not the percentage change. Although it looks like he's recording the percentage change down here, which is interesting. So actually the bars are correct. This is not correct. See, you have to. So no matter how smart AI is not at this point in time able to replace humans. I know this is the wrong number. He doesn't. He's like, it's just, he went to the Fed, he searched for PPI, and he knows enough that he wants 3 years. He knows enough I want year over year, not month over month or quarter over quarter. He knows that, but I have to keep reminding him. And then he pulls and he doesn't realize this is the wrong number. This is the correct number. Now, a human should be able to. So I saw this wrong, so I would just assume that's wrong. And then I put my mouse over it, and in 1 second, I'm like, oh my God, that is the right number. But that's the wrong number. AI can't do that. He's like, you told me to go to the Fed, pull the PPI data. So I did. This is actual PPI data. It's just the wrong PPI data. We want the percentage change. Cool. So you got to do this for every event, for every major currency in the world forever. But besides that, it's easy. You ready? 2 minutes, guys. 2-minute warning. What else we got? Speech. Oil inventories at 10:30, which is 2 hours and 1 minute and 42 seconds. That's a doozy. Okay. We had API. We had a miss on API yesterday. And these inventories are probably going to be low. It's
Spike
gonna
alert,
scare
1 minute
people.
until United States Producer Price Index is released.
90 seconds. Aussie's still the strongest. Kiwi's still the weakest. Let me remind you, if you're just seeing this for the first time, everything you've seen so far is free. So if you haven't signed up and logged in to get this free information to help you trade better, your mother would be concerned about you. Baby, don't be stupid. I can hear her right now. Sign up for traders.com. So the forecast, the headline number 54. I wouldn't be shocked, though, if you pulled the percentage change because he's mixed up. But anyways, we'll see. What we're interested in is it going to be higher than, let's say, 55? 155. So we were working on this. He thinks he can get it faster. Let's see if he does it, because I can't test it. Yeah, I'm already disappointed. Come on. See, he should have it already. All right. Let me yell at him? No, don't. Let me inform him. Oh, I'm not even logged in, which is good. That's why we didn't hear two voices. So he does get the data, but it's lagging for some reason. And we worked on the pipeline on this. So we know it now, we know it works, but it's supposed to be 1 or 2 seconds. So let me just let him know. I got to take a screenshot because the best way to talk to AI is to be incredibly specific and now visual. But Windows just took a dump on it. Are we still rolling? It looks like we are. I can't even open my. There it is. Now we got it. Yeah, my fan is running now. What? Now look at the dollar. Just got this. Went from mediocre to ripper strong. That's risk off, guys. So I'm assuming a higher number. I'm waiting to take a screenshot here. Windows just collapsed on me. All right. And then we'll move because we do get it quite quickly on our Squawk Box. So let's go to the Squawk Box. Oh, it's ripper high. Yeah, it's ripper high. So
Germany current account
dollar
NBSA
strong
increased to 23.6B in March from previous 22B.
US PPI final demand for April 1.4% versus 0.5% ESD. Year over year, 6.0% versus 5.9% estimate. United States Producer Price Index year over year came in at 6%, above expectations, 4.9% in April. So did you see that?
United States Producer Price Index ex Food and Energy year over year came in at 5.2%, above
so we saw that
4.3%.
Before the news came out, we saw the dollar jump. We knew that just instantly. Isn't that cool? So, have things changed? Yeah, things have changed. Why? Important macroeconomic news. So what should you be doing? Sell Kiwi dollar. And a Canadian dollar was a dog with fleas yesterday, but apparently is benefiting from this current move. Kiwi is weak across the board, but I would expect that dollar to be strengthening. Okay. Metals are up, which is kind of interesting. They might come down on this news. Treasuries are up. Risk is very negative right now. So dollar strength is normal. That's exactly what you would expect. Aussie will probably cool off a bit. Yeah. So we went from the best trade being Aussie Kiwi to the best trade, well, it's still Aussie Kiwi, but Kiwi dollars getting close. Kiwi CAD is about the same. And they're about to probably, I would imagine, especially with the PPI news, USD gets strong and Kiwi dollar quickly falls more than Aussie Kiwi is rising. So that means what? Aussie dollar are going to be about this. Aussie versus US dollar are both going to be strong. Well, right now, the difference between those two is 0.0023. We're that accurate, bro. 0.0023? Yeah. Which in human terms, Aussie dollar and US dollar are exactly the same. So there's very little statistical difference between going long Aussie Kiwi or shorting Kiwi dollar. Kiwi US dollar. Statistically, it's the same trade. Now, Aussie Kiwi's been doing this for hours, where we just got new US dollar strength. So that's where I'm like, well, in the next, let's say, hour, I would not be shocked. In fact, I would expect this negative 0.42 to turn to negative 1. So it would get almost triple. 1.2 would be reasonable. Triply bearish than it is right this second. And remember, 5 minutes ago, it wasn't bearish at all. Now it is. Things change. Whoa, you're still trading 5 minutes ago? So look, again, kind of like a signal, huh? Maybe you like this view. These are all worthless. Now, the next step for me is to add gold, oil, and crypto to these signals, right? Yeah. Okay, so now you can just sit here, buy, sell, sell. Look at the conviction score. This wasn't even a trade 5 minutes ago, and now we're heavily short Kiwi dollar. Nice! Yeah. Hey, H2O producer, we're talking about uploading yourself to the internet. It's interesting. One of my favorite video games, and I used to be a gamer. I just don't have the time now. I'm an AI person more than a gamer. But one of my favorite hobbies was sitting in my movie theater playing video games because, the characters are 6 feet tall because the screen is 120-inch 1080p. Actually, it's 4K. Sorry, 120-inch 4K. And it's a laser projector, not a light projector. So it's really cool, right? So if you're playing video games, dude, graphics are crazy. And the size is insane. So playing video games is great. One of my favorite over the last 5 years or so is Far Cry 5. I've played that, finished it, I don't know, 10 times already on hard mode. And I got my son into it, and then he played, and then he got his friends, and they've played. And here's the thing, we're talking about uploading your brain to the internet. Well, I miss Hope County. It's the mythological place that. Oh, are we getting the answer here? Where this game takes place, this made up place in the video game. But my mind misses it because I know it so well. My mind misses being there, not playing the game, just being there. And I think that is fabulous. I think that's really interesting. Where I just I miss it. My brain doesn't. It's like, Wayne, do you know what Saskatchewan is like? Yeah, I grew up in Saskatchewan. I know exactly. I have it all in my brain. I know exactly what Saskatchewan's like. It can be beautiful. It can be terrifying. But just as real, I miss Hope County in Far Cry 5. And every once in a while, I like to just start the game over and just kind of go in and run around and go to the towns that I like and go to the landscape that I like. Just, I miss it, just like I miss home. because when I think of Saskatchewan or if I think of Hope County, they're both just electrical chemical energy in my brain that produces an image of what I remember. But none of it's real. Okay, so this is interesting. This is the second part of the component. So the first part of the component was supposed to close, and then this reopens, and he's like, hey, PPI was a beat. And, well, he hasn't. So he's still working on it. So, well, we're getting there. We thought we had it working. I worked on it yesterday and last night. So Canadian dollar slightly strong. US dollar slightly strong. Aussie dollar slightly strong. Okay. Now, for those that don't believe in fundamental analysis, this is only doing price action. So if you're heavily focused on trading technicals, you could just sit on this page all day. And when something is added to the list, you pull it up on your charts. That's how you would do it. So if Aussie Swiss franc pulled up there, it just popped up, you would just pull up your Aussie Swiss franc chart and start doing your personal technical analysis, whatever your strategy is. But all we know is right here, right now, that is happening. Go. It's enough. Imagine every single trade you made or every single chart you look at, you already know is a logical, real-time opportunity. And it's not a guess, it's not an assumption, it's mathematically relevant right this second. So imagine you started every single trade looking at the right thing at exactly the right time. Would it help you? Look at how mediocre these trades are. A 3 and a 1. So this has changed. Dollar has changed, huh? You're watching it in real time. Oh, it might be even dropping to a 2. So that dollar strength is wimping out. What you want to see is maybe that's the dip. You see it? Oh, up, 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 hey, up. See how real time it is? Dude, it's crazy. So if you are selling Kiwi dollar, we already know Kiwi dollar itself is weak. So what you're really playing is dollar strength. And so what would happen if you were trading this? Let me get my drawing tool. What do you know about price action? Well, down would create a lower low. Specifically, if this goes from a 3 to a 4 to a 5, I think it's impossible for that to happen without a lower low, right? So Kiwi dollar would make a lower low, which it did. And now we've seen the math change a little bit. We went from a 5 conviction to a 3, and now a 2, 2.5 to 3. So what's happening? Well, to create that, you're getting this. What is that? A pullback. So that's where we are now. And so you might on your chart say, well, I see a moving average, I see a price, I see a resistance line, you see something, but now your plan is this. Okay? And so this is where you see 3, 4, 5, 4, 3, 4, 5, 5, 5, 5, 5. Okay? And then it'll cycle again, which is totally normal. We call that price action. 5, 4, 3, 2, 3, 3, 4, 4, 5, 5, 5. Okay? And this is our first. This is your reload. Okay? And now you're done the New York session. Maybe get 3 trades out of this. Because we're only analyzing the day trade. So there you go. That might be your next 4 hours. Okay? This is the index radar. Okay? So when you click on it, let me go spike, then I'll go index. Okay, it starts here, but you have toggles. You can change the time frame or the view. It's all the same thing. This data and this data and this data is the same data. Use the one you want. You're like, Wayne, you used all this data and then you designed 3 different views on 3 different time frames? Yeah, because I love you. You're my sweet baby. You're special. Yeah, why not? If you're going to do it right. So that's how you do it. And that's it. I'm done. I don't sleep enough. I'm sorry. I know, it's crazy. Ew. It's 8:30 in the morning, and I need a nap. I got a 9:30 meeting. I think I have a noon meeting, and then I got to get to Georgia Tech, and then maybe do my at 4 o'clock at 3 o'clock. Busy day, bro. Yeah, busy day. So thank you. Let me show you the things that are important. Tradars. Bro. Enter your email. Start for free. You don't need a credit card. Now that your trading is so intelligent, you're going to need a trustworthy and ethical broker. And look, I've been working with Traders Way for 11 and a half years. They're good people. You know, when we talk about our children. Isn't that cool? Yeah. So I love the combo. They are our prime broker. If you're a U.S. citizen, we have an execution partner for you as well, because you won't be able to open a Traders Way account. But I am going to bring back, right, the opportunity for you to connect your Traders Way with your Traders account and lower your spread. Would you like all of this and a spread rebate? Is that too good? Yeah. So I will relaunch it. It'll be inside, Daniel. It'll be inside. So you can just open your account, connect it, you're done. Yeah. So every time you make a trade, what happens is you get some of the spread given back to you as actual real cash. Cash you can withdraw, not phony cash. Now, your spreads are narrow enough anyways where, each time it's not a ton of money, but over a month, over a year, like what if you got, I'll make up a number. What if you got $750 back per year? Dude, I don't know. I don't know if it's 7,750, but it's because it depends on your lot size and what you trade and how often you trade. But dude, cheaper is cheaper. Cash rebate is cash rebate. Cash is cash. Right? And like I said, not, and the other thing we can do if you want it, some equity boost. If you want an equity boost, I can get that done for you as well. So I just have to reactivate it. We started with the program, and then I got too focused on 2.5, but I can relaunch it. Cool. So what do you want to do right now? That's it. See? That's how long. So you log in, you'll see this page, and you're like, what should I be doing right now? Go to the indice radar, go to the signal cards. That's it. We're done. In fact, I can do it faster than that. It's right there. See? You log in, and on the first page, it shows you. You can just sit here on the first page. And that's all you do now. Would that be helpful? I'll see you later. Peace on earth. May the pips be with you. May your profits be above average. Pachow!